The purpose of the Securities Acts is to provide information to investors about companies. The way that works is by companies filing that information with the Securities and Exchange Commission, and the Securities and Exchange Commission making that information available to investors. Since 1996, that's been done electronically, which means that those filings are available to investors basically in real time. We're going to take a look at that if we go to sec.gov. This is the SEC's webpage. There's all kinds of information about securities law here and about SEC enforcement actions, but we're going to focus on the company filings. So under Filings and Forms, EDGAR stands for the Electronic Data Gathering, Analysis, and Retrieval System. The first thing you'll see here is a little tutorial. If you want more information about how to use EDGAR, you can go there. Description of forms. You'll see that this is an Adobe file that just has a list of the different forms that do get filed. So if you are looking at a list with a company and you see something like F3, you can look on this chart to figure out what is an F3, what does it do. Now if we come back, the main place you're going to go to use EDGAR is search for company filings. Click that link. And there are different ways to look up information. We're going to take a look first at the latest filings. This is how we can see, here you can tell that things really are in real time. So here's the most recent file that's been submitted today, Stephen Green Form 4, and the date is June 16th, which is today, and the time is 14:25. And my clock on my computer says 14:26. So you can see that it's been just 30 seconds maybe since this filing happened. If we refreshed our screen, we'd probably see another filing. Something else that you'll notice here, if you look up here under limiting filing results, we could limit it to search just for a company. If we know that there's a company that had a filing today, we could search for that. We can also look for specific types of forms. We could see who's filed their annual report today. And then down here, it asks us about ownership forms, include or exclude. The ownership forms are forms like this Form 4. And you'll see that, if we take a look at it, it's just a simple form that tells us that Stephen Green is he's an insider who is either buying or selling shares of stock that he holds in the company. So you can imagine that each company you'll see a lot of Forms 4 because the insiders have to file those every time they trade stock. So what you can do is exclude ownership forms when you look. Then you'll only see the main forms. Whoops, we need to go back out of here. We're still in Stephen Green. We don't want him. Okay, so we're back now to our most recent forms. So now if I click exclude retrieve filings, you'll see now that we only have other forms that aren't ownership forms, and these are forms that are actually filed by companies, not by individual insiders. Now if we want to look specifically at a certain company, we'll go back out here and take a look at companies and other filers. And I'm going to first take you to a company that has just done its IPO. The reason is that companies that did their IPOs before 1996, you won't see their initial registration statement because that happened before the electronic filing. So we're going to take a look at Verigy's filings, so you can see this initial registration statement. Now notice they don't have very many filings because they just started their initial registration in March of this year. Now what you see is an S1, which is the initial registration statement, and a whole bunch of these S1As. The A just stands for amendment. So they filed the initial registration statement, got comments from the SEC again, and continued until finally you see up here that there's a form called Notice of Effectiveness from the SEC saying, we finally approve of your registration statement. It's now effective, which means you can print a final prospectus to deliver to shareholders. either electronically or in paper, and you're now authorized to actually sell shares. When these amendments are happening and incomplete, the company is in the quiet period where they can't do certain types of advertising and they can't sell their stock. So we'll take a look at those in a second. Now, one thing that the SEC does when it comments on these S1 registration statements is to comment on what they now call plain English, and that started happening in about 2001. So if you would look at forms that were filed before 2001 and then look at forms that have been filed since then, hopefully what you'll see is much more user-friendly information. For example, one of the requirements is that you break up long paragraphs and put lists in bulleted lists. It just makes it easier for investors to read and understand. They also don't want companies to use a lot of legal, accounting type language that normal investors just can't understand. So hopefully they're easier to read than they once were. So let's take a look at this initial registration statement and get kind of a feel for what's here. The first page is the form page that the SEC requires. Notice that it says what the form is and information about who's involved. Now notice that some of the dollar amounts are blank, and when we come here to page 1 of the prospectus is the part that goes to the shareholders. The registration statement is the part that gets filed with the SEC, but the prospectus is actually the main center of the registration statement. So we get here to the first page of the prospectus. You'll see that the number of shares is blank. And you see this language here in red that appears on a preliminary prospectus. We call it a red herring prospectus because of this red language that tells us that this is not final. They cannot use this prospectus to sell their shares. It's just preliminary. So you'll see a number of places where it's blank. Now, if we went through this whole document, you can see that it's pretty long. It's around 130 pages. The idea here is that investors need all the information that will be useful to them in trying to decide whether to invest in this stock offering. So it takes quite a bit of information. Fortunately, there is a table of contents that we can use. So let's just take a look at what's here. We begin with a summary of what it is, and information about the company. What is this company? Relationship with Agilent. This is kind of a special case because this company is a spin-off from Agilent. So they have to describe that relationship, why the spin-off, what the company is doing now. The offering, they need to describe what is this deal? How much stock? How much money? What are they going to do with the money? Then we come down to some of the financial information. Then I want to show you this part, risk factors. The company and all the people really who are involved with the registration statement are liable under Section 11 of the 33 Act if there is a material omission or misstatement in the registration statement. And this is kind of where risk factors come in. The company has to make sure that any risk that is foreseeable and important to investors is disclosed. Otherwise, that's a material omission. You have to be really careful about describing what these risk factors are. And you'll notice, if we kind of scroll through, that there is no shortage of risk factors. And this is pretty typical. This is a big section in most registration statements. And just to get an idea, we may need additional financing, which could be difficult to obtain on favorable terms or at all. So they're saying we may need more money someday, and that may mean if we can't get it, that our company will fall and your investment won't be any good. More risk factors. So we just keep on going through the risk factors. When will they end? There are a lot. Okay, so now we get to some more information about the company, about the separation from Agilent. Let's see if we can just go back to the table of contents. Here we go. So we just looked at the risk factors, information about what they're going to do with your money if they get you to invest in their stock. What's all their cash, capitalization, dilution? I want to know that if I'm going to be a shareholder. Then financial information. Then this is another really important section. Sometimes we call it MD&A, Management's Discussion and Analysis. This is where the managers of the company give kind of their rundown on why the financials look the way they do. Their explanation from a management perspective. More financial information, more information about what the business is, who the managers are. And this is kind of a short one because this company is just going public and they need to increase their board of directors before the IPO gets completed. So you'll notice that there are just 2 directors for now. So this list will get longer, but it gives biographies about each of these directors. Then they tell us about who the board is, what are the committees of the board, how does the board get paid, all that is important. Then how much stock do these people own, particularly if they own a large percentage of stock, over 1%. How do we compensate these people? So here, this can be pretty interesting to see how much money is the CEO making, how much money are other officers making. We can see here that the CEO made $397,000, bonus $84,000, much lower than what you see in a lot of companies that have been publicly traded for a longer amount of time. What kind of options do they get? Their share exercises. Then information about things like pension plans, stock option plans, any opportunity there is for other people to get stock that might cause dilution for whoever invests in this IPO is important information. Then we have information about any other things, like if there are lawsuits against the company, whatever else might be important to shareholders. And we'll just skim through some of the financial information. So that's it. That's the S1 registration statement. One other thing to notice down here is the exhibits. You'll see that there are exhibits that are required to go with the registration statement, and usually you're going to find things like the articles of incorporation, or here are articles of association. You'll find the bylaws, all kinds of information about important contracts that the company has that ought to be disclosed. And if you want to find those exhibits, they're actually here, so they're attached separately. Some exhibits will also be just listed as, well, we already filed these exhibits with some other filing, so look back at that other filing. So now if we go down the line, they revise, 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 and then effective, and then here's the final prospectus. This is what the prospectus looks like that will actually go to people buying stock in Verigy. Amount of shares that are being offered, what kind of shares, who the underwriters are, a summary of the prospectus. Again, we're just back into the same thing. And notice now all the numbers are filled in. So this is just the final version. You can see it's pretty much the same thing we looked at before.